Hello and welcome everyone to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, November 29th, the post-Thanksgiving trying to stay awake malaise day. David, Josh, both, it's good to see you both. Ron Quaranta here with my amazing co-hosts. Thank you everyone for tuning in. Before we begin, our usual disclaimers, please note that everything discussed should not be considered accounting, investment, legal, tax, or any kind of advice or investment recommendations about tokens. And then obviously everything David and Josh and I are talking about represent our own personal opinions and not necessarily the opinions of our respective firms. David, Josh, I'm still trying to recover from Fat Pants Day. I'm just going to say it, but how was your Thanksgiving?
Mine was great, Ron. The weather's been great down here, and spending time with some of my closest family, and my daughter and I flew down the other day, so very happy. Football games left a little bit to be desired, but can't have everything perfectly aligned.
And Josh, when you take off to the private resort for the private chef to cook your private Thanksgiving dinner, how was it?
Well, it wasn't very private at all. So, as you guys know, I went to the Poconos with my kids to Camelback so they could go to Aquatopia, and I could avoid cooking since I don't cook. But I enjoyed, and you can see it all over my face.
Josh, David, good to see you both. For everyone in the audience, again, thank you so much for joining us. If you've got questions for David or Josh or I, please put them in the chat. We'll definitely try to address them. David, I wanted to kick off, and as everyone in the audience knows, the three of us text back and forth on a pretty regular basis. David, when we started prep and I sent some notes to both of you, I think it was Wednesday after our long lunch on Tuesday, which was amazing. I said, oh, market retreat and the crypto prices are pulling back. And of course, you and I get on the phone this morning and it's, holy crap, it's looking like 100K, maybe the run for this weekend. David, what are you seeing in the crypto prices over the past couple of days and leading into the kind of the broader holiday season?
Sure. Well, like we said on our PSA last time, look, crypto's volatile. It's not always going to be up and to the right. Look, there are people who bought at 70 or bought at 66 and who wanted a front run or potential sell-off at 100. So they're taking profits. And I think profit taking is perfectly healthy. Somebody on X was saying that they had lettuce hands at the first sign of a little dip. People were selling, and there probably are some people who are selling. Yeah. But I don't really read too much into it. I think it's healthy. I do think that directionally speaking, we are up and higher, and that we will break through 100 either this month or next month, but just short, Ron, of our 125 bet. It would make me laugh if we got to like 120, 122, and then we retrace from there.
Which means it's definitely going to happen, David. That's definitely going to happen. Josh, weigh in here as well. You're stuck on all the text messages we share talking about price. And for the audience, I just want to share, I had the deep privilege of having lunch with Josh and David in New York City as a prelude, a preparatory session, David, to the big steak dinner in January. And David ordered a beer, which was amazing. And Josh turned out to be the high fancy wine drinker, ordering a fancy Malbec. Josh, weigh in, my friend.
I mean, what I can say that bodes for our dinner is that we weren't able to finish the steak that we shared. So.
Well, it was the size of a Volkswagen.
It's really funny.
Three. It's no joke.
Shout out to Emma Channing. Go ahead, Josh. I'm sorry.
Oh yeah, shout out to Emma. You're right. She still thinks 125 is possible.
I am with Emma.
It's looking like David and I might be cheap dates, given the amount of steak that was left over from our lunch. But yeah, so I'm just wondering, I saw an article just in the past day that it says XRP outperforms crypto majors as Japan yen strength signals Bitcoin trouble. That's an article on CoinDesk by Sharia Malwa. I'm just wondering, do you guys see that as well? Like, do you agree with that, or is that just?
Well, I mean, I've got an opinion.
I'm saying that first.
So one thing, Ron, I think since it was lunch, you got off easy on on that. But don't worry,
Oh,
at dinner, I'll be deep into the wine list, so don't worry about that.
Oh, dear God, this is terrifying.
No 4-digit wines are run. We're not.
Oh, okay.
But all joking aside, look, XRP was trading, really off its highs for so long. So it was trading in the 50, 40, 50, 60 cent range. So now it's back at like $1.70. So it's retraced a lot, and its all-time high was 3 something. So I think as you look at that chart, it still has a long way to go, but it's a long way down from where it's been, whereas Bitcoin is right near its all-time high. So I don't think those are like the best ways to sort of compare one versus the other than to say that probably on a percentage basis, XRP has more room to run than Bitcoin does right now, just because one on an all-time high and one, much further below it. But also, I believe that Brad Garlinghouse is going to be speaking on 60 Minutes on Sunday night, or I guess a taped portion with him. And so I have a feeling people will be very interested in what he has to say.
David, and I'm with you, but I just want to add one thing to that. How much of the XRP appreciation, and I don't know if I'm sure both of you did see the article, someone had posted recently that there's a chance the SEC suit against XRP is dismissed. Now, how much of that, David, Josh, do you think feeds into the rise of XRP?
Well, I think a lot of it does. And look, in some ways, it makes sense. We're going to have a new chairperson, and I think there will be a whole-scale reevaluation of these cases that are brought. But the one thing I do want to mention, and I want to give a shout out to Jason Gottlieb and Jason Brett from WSBA, when we had a meeting on this, is that whatever's going to happen is going to take some time, because we need a new commissioner. We need a new chairperson. We're going to need at least one more Democratic commissioner. And it takes time for these to come into place. Then we're going to need a new division enforcement head. And there's going to have to be some time spent formulating policy and deciding, what is the process that the SEC is going to go forward with in the new sort of administration. So I think this idea of the case being resolved shortly and or having an XRP ETF shortly is not, practical. Like, it may happen in 2025, but it'd really be towards the tail end of the year and not in the next 2 or 3 months.
David, Josh, please weigh in on that. And I do want to add one other thing that actually popped up during our legal working group meeting on Monday. But Josh, do you agree?
I do agree. I mean, I am wondering, I've heard that we may, as early as Monday, get a new SEC chair named. So that's exciting, just to think about in the midst of all of this. But I do agree. I mean, I don't know in terms of the litigation how long that will take to know whether the appeal will be continued or not. But I mean, I think not that I'm giving investment advice, this is not investment advice, but I would imagine that if the Ripple decision isn't appealed, we're going to see action on a lot of different types of tokens and a lot of different types of crypto ETFs.
Josh, David, thank you both so much. David, I want to ask you one more question. One of the things that came up during our legal working group meeting on Monday in the news was Damian Williams, the U.S. attorney in the Southern District, announced his resignation coming up. And David, I know, knowing that you and Josh are not litigators, but we've got a lot of litigators that are colleagues. How important is that from the perspective of defendants in the crypto space? And I'm not sure that that's an important topic enough, but it is important to understand how different offices and different districts approach crypto enforcement actions. David, do you have any thoughts about that?
Well, I do. And for starters, again, we're going to have a new administration. So it's it's typical to see the prior heads of different parts of the agency sort of, resign and give the chance for the new president or president-elect in this case for the second time to nominate his own people. Look, I think the DOJ and the SEC work closely together. And so I think a lot of the actions that they're going to bring are going to be coordinated. And so I think there's going to be an overarching policy, and I think the two agencies will work together on prosecuting the cases that they think are important. And look, there still is fraud in the industry, and there's still going to be bad actors. And we want the SEC and the DOJ to be really, vigilant about finding them and, safeguarding people's assets. So I do think they'll be busy. I just don't think that they're going to be bringing these cases that we think are really more regulatory focused or more focused on sort of the ecosystem, not for, fraud or any impropriety, but more because there was a view that, these token projects weren't following the law as Chair Gensler saw it.
Yeah. Josh, do you want to weigh in on that? You're on mute. This is what she gets for traveling to resorts.
Yeah.
That's okay.
Yeah, no, I mean, it's probably getting boring to say this, but I agree with David. I mean, I think also, as we've talked about, whoever the new SEC chair is going to have as the head of enforcement is going to have a big impact. I think certainly it's, as we've heard from the very top, as well as from sitting SEC commissioners, right, where it's been said, like, okay, the era of crypto enforcement where there's no fraud or other harm, that potentially is behind us. So I think there's going to be a big shift regardless, even if people stay in the roles, but certainly looking to see who comes in next. I am really excited though to talk about one of the changes, that has come up, but it's come up through the courts, which is the tornado cash.
Go for it. Yep.
Position. So folks at home, and you guys, of course, have seen, I'm sure, that the Fifth Circuit overturned the Van Loon decision, and basically said that OFAC, exceeded its statutory authority under IEPA, if that's how you say it, right? And that smart contracts weren't property. So if you may recall, some of the litigation around Tornado Cash had to do with whether the statutory authority has to be a person, an entity, or property, right? And here, none of the above. So, I mean, it'll be interesting to see what happens next, but that's a big win.
Josh,
go ahead.
Go ahead.
Sorry. I was just going to say, the one thing that comes to mind, though, is we have to remember, I think, also that FinCEN used its 311 powers under the Patriot Act, right, which are seldom used, to designate all virtual currency mixers as being of heightened, or I forget what it's called, but heightened money laundering concern, significant money laundering concern, whatever that modifier is. So I don't know whether, like, certainly the OFAC decision is impactful, and that we've seen the market move just on that basis. But whether that has any effect on what FinCEN has done, different story perhaps. But would love to hear your thoughts, guys.
Josh, thank you so much. David, it's a really good point and is an important decision. David, let me ask you this. When we look at the Fifth Circuit decision, that, are we building up enough case law to get rid of the idea that you can sue software, which was a primary concern for a lot of people in the space?
Well, I think there's a lot of people in the industry that hope that we are getting there, and that each of one of these cases are building blocks. Look, I think, as we said before, we're going to see who's going to be heading these different groups, different agencies, and what their methodology and thought process is, and what kind of cases they're going to bring. I do think that, and you've seen a lot of this on X, that there's been a lot of things that have gone on in the scene about tech companies being debanked. There has been a lot, and I think that will come out. And I'm actually been doing research on this, potentially write like an article about it. But it seems like there was a real, we've always believed in the choke point 2.0. I think the three of us have, but others have been a little dubious about it, show me the proof. But it really seems like there's been a concerted effort by different branches of the government in this, in the last couple of years, really to make it difficult for tech companies to operate in the US. And I'd like to see more of the actual facts. So that, I've read that somewhere like 30 CEOs from tech companies said their companies were debanked. I saw the Winklevoss twins post that they were debanked several times on X and others. So I do think there's a lot of credible evidence out there that this is occurring. And I would like to see, I think the industry would like to see what exactly has been going on behind the scenes. So I think that's really important. And I think that will change, obviously, under this administration.
David, it's and one other example, which was really egregious to me, one of the executives on the West Coast that you mentioned, I think he was a major bank customer for something like 25 years, entirely debanked and given 5 days, basically, to move his money, which is just beyond poor customer service, that is an egregious breach of how you treat clients. It brings us to an important point. We've said it many times, David. There's a new administration coming in, new SEC chair, new folks across the board in many of these positions. And aside from the theater of investigations, do you think a new administration will investigate debanking based on the work of the prior administration?
I mean, look, I think it's important that the public have clarity about what's gone on in the past and what is the plan for the future. But, look, a lot of these banks are regulated entities. And if the regulators were leaning on these banks to debank crypto companies and other tech companies, we have a right to know. Like, again, the regulatory regime does work for the people. Like, ultimately, government is for the people. And there should be clarity about what is going on.
Yep.
Typically, if a client is debanked or something along those lines, and there's reason to believe that they're doing, whether it be money laundering or something else, the banks don't have to give a reason why they're being debanked.
Sure.
And there's issues sometimes when you file suspicious activity reports for suspicious activities by a potential client or in a transaction that you're aware of. These are confidential. You don't report them. You don't tell the parties that you filed a SAR. But a lot of these cases don't seem to rise to that level. And I think the public deserves to know. These companies deserve to know. And, going forward, my hope is that the new administration would resolve this and that it wouldn't continue going forward.
David, Josh, go ahead. Josh, did you want to add something? You're on mute again.
Speechless.
He is speechless. Did you want to talk about Polymarket?
Oh yeah, if that's okay.
Go for it.
So, as we know, Polymarket was one of the great predictors, I would say, of the election results. And there are certain pages on Polymarket. Not that I'm a betting woman, as we know from the bet between you guys. But there is a page that says Trump won, now won. But this was brought to my attention, and it's betting about certain things that will happen prior to the inauguration or within a certain number of days in office. So inauguration day is in 51 days, 11 hours, 42 minutes, and 15 seconds, or now 14 seconds. And so some of the things on here include it's bet that there's a 90% chance that Trump deportation, executive action in the first 100 days of office, a 7% chance that Trump ends the Ukraine war before inauguration. I'm just reading this from this. 63% chance that Trump ends the Gaza war by first 100 days. 40% chance that Trump ends taxes on tips. 40% chance that Trump declassifies the JFK files.
Oh, God.
And 67% chance that Trump pardons Ross Ulbricht in his first 100 days. So we'll see what more we find out. Let me just see if there's anything else of interest on this.
Does it say anything about wagering that Ron wins the bet? That's the important thing you need to be looking at.
No, I saw that as a potential developing market with an 8% chance, Ron, as of the price right now.
God. Josh, go ahead. I want to move forward. But
what I do see is that there's a bet on who will replace Marco Rubio as Florida senator, but I don't see David's name on there.
I think he can be a write-in candidate, Josh. David, Josh, there's lots to cover, and I know we've only got about 10 or 12 minutes left. It's the Leftovers Friday after Thanksgiving edition of the Crypto Roundup. David, we've got to talk about a couple of different things, certainly economic news. We did have some economic data this week. Personal consumption expenditures, which is the Fed's preferred measure of inflation, as well as CPI, I believe. There's certain data. And it's interesting, David, you and I were talking about this off camera, where you look at some of the economic analysis and you'll see some economists say, well, things are on track. It looks like inflation is under control. And you can easily look at other analyses that say inflation's ticking up. It's stickier than we think. The Fed's not going to cut interest rates next month. And David, I'm sort of in that camp, which weighs on macro and weighs on things like Bitcoin, for example. David, am I wrong?
No. Look, we've talked about this all year.
Yep.
There are sticky costs that that people are paying on a regular basis that really hit lower and middle income workers harder. like I said to you before, like when I was in New York, there's certain places, if you bought food, if you use a credit card, you had to pay an extra 3.8% surcharge, because that surcharge at the companies or the restaurants or stores were paying are now being passed on to the customers. So just think about that a lot of people who are buying food at different places are being passed on 3 to 4%, fees. There's your 4% interest right there on like day-to-day goods, and it's not even including rent and other food and groceries in general. Look, we're like looking at raises off a very high base. So I think things are continuing to cost more. Maybe the rate of inflation's slowing down, but it is very sticky. And I think also you have to look at anchors. And what I mean is, if you've anchored like a rent for an apartment at $2,500, you might give somebody a month free to rent that apartment, but you're not looking to like lower the rent down. So
Right.
I think you're really seeing prices being very sticky, and even 2 to 3% or 4% on top of that is still meaningful, especially for the lower and middle income workers.
David, that point being said, and Josh, certainly chime in. Are you looking at when us not having a Fed interest rate cut in December? And in my mind, that's not great for risk on assets.
I mean, yeah, I don't see the reason why we would get one. I think the bond market is telling you, especially like the 30-year is almost still at 7, that,
Yep.
it's nice that they cut the last time, but, they're not pricing it in. I don't necessarily see it as an issue for Bitcoin in the short term, because I think there's a lot of momentum in our space. There are a lot of people who are looking to buy. We have companies buying and putting it on their balance sheet. We have, sorry for the noise in the background.
That sounded like someone blowing up a helium balloon.
like
I just got to tell you.
Elephant.
I think the extra bedroom door probably needs a little oiling, but I think that all joking aside, I think that there's a lot of interest. We're seeing miners buying Bitcoin, putting on their balance sheet. MicroStrategy is still buying more. There's this meeting Michael Saylor is supposedly having with Microsoft about buying for their balance sheet. Yeah. And I think the other thing that we haven't talked about much is I think that certain asset managers are going to want to have some exposure to the ETFs on their books for the end of the year, so they can show their clients that they are, they've moved to the future and now are diversified appropriately. Yeah. So no, I don't see this one as bearish personally. But Ryan, I know you have a view on this. What do you think? Do you think we're going to cut?
No, I think we're not going to have an interest rate cut in December, barring some significant new data that comes in. And David, I'm going to go back to something the three of us talk about a lot. It's not the data, it's the revisions. I'm going to want to see what are the November revisions to some of this data. But the way the data looks right now, we're not going to have an interest rate cut in December. And I think that's arguably fine for crypto assets. I think there's a lot of momentum. But David, you raised something that I want to bring up. And Josh, I want to get your perspectives on it as well. You raised MicroStrategy. And again, nothing we discuss is investment advice. They want to market again to buy a significant number of Bitcoin. I don't even remember the amount of Bitcoin that they own, but it's not insignificant. And when you look at MicroStrategy's equity price, David, they're up 500% in, I think the period of time is a year. Someone in the audience, correct me if I'm wrong. And they still have the majority of analyst ratings or buys on MicroStrategy. David, I don't mean, I generally don't short, and this is certainly not investment advice. You've got to imagine some folks, some shorter or selling or circling.
Yeah, look, anytime a stock has gone up so much, it garners interest from both the long and the short side. Yeah. I think the thing here we have to remember is, don't get so much caught up on the stock price of a certain stock, but what are the earning? What is the PE ratio? Because ultimately, whatever that is it should be reflective of what the price is, and it gives you a way to determine, what the value is. And the way I look at it is, I think there's a lot of companies that want access to Bitcoin, but they can't hold it on their balance sheet. Some can't custody it depending where they are. And MicroStrategy is a way to get exposure to Bitcoin. And I think we've seen some very big insurance companies that are buying these bonds, these convertible bonds. And so, I'm not going to make, it's not my place. I'm certainly not an analyst on the MicroStrategy stock. But look, He's got a very clear thesis. He's very transparent about what he's doing in the marketplace. And I think, people are making bets accordingly. And that's how our markets are supposed to work. So, look, I think it's, right now he's been a really good evangelist for the space. Mm-hmm. And I think it's good that corporates who want exposure can get it through his converts, who are buying the stock. But I think the premium lies in that there's still a number of companies that can't get exposure except through maybe owning the ETFs and owning his stock or the converts. And so until that they can hold it on their own balance sheet or feel comfortable with that, this is a proxy for Bitcoin.
And David, that's reflected in the inflows for the BTC spot ETFs, which I think hit an all-time high this week. Josh, weigh in here. When you buy the 6th or 7th real estate estate, are you waiting for an interest rate cut in December?
So I mean, it's interesting because, again, I share the view of David, although certainly less informed about certain of these economic issues. But we have seen Jerome Powell remind everyone that he's still there, right? He's independent. I think it's a couple of things I just wanted to mention, that we saw in the past week, although some of this happened last Friday. One was Scott Bessent, right, being named as the successor to Janet Yellen. I think that, as you may have seen from people's postings on X and otherwise, he's been quoted as being extremely bullish on crypto. And I think that is a really big change from one thing that stands out in my mind with respect to Janet Yellen, although this is probably unfair because she's certainly done a lot of things. And nevertheless, in the Binance decision, when she was calling it Binance, finance, right? So I do think this will be a really big sea change, right? With this appointment of a billionaire hedge fund person who's very crypto friendly. Yeah. I also wanted to mention just a little plug for some, as well as to bring up some other things on the CFTC's GMAC committee's subcommittee on digital assets. Just within the past week, a few things happened. One is the CFTC GMAC approved the recommendation to include tokenized non-cash collateral. So the CFTC for a long time has permitted non-cash collateral of different forms, and now sort of moving forward with the ability to have distributed ledger technology, aka blockchain related collateral. And at that same meeting, Chris Perkins from CoinFund presented on a proposed utility token definition and treatment, which many of us contributed to, and which I should just plug Cheryl Isaac at KNL Gates, who really did the lion's share of supporting the work on that and the drafting. But I think a number of folks in the industry contributed to that, and it's one more step forward. So
really good point, Josh. And Josh, it sounds like your personal barista is making your second cappuccino in the background. And shout out to Emma Channing, and thank you for the slight heart attack. I thought I quoted the data so completely wrong, and I was going to say I'll never give a percentage again. Emma, thank you for the correction. $386 today's price. 1 year ago, it was $49 MicroStrategy. Yeah. David, Josh, really good conversation. I know we've got a couple of minutes left. David, I want to come back to you with one other thing. And for everyone in the audience who's not aware, David and I and Josh often share images of our contrarian indicator. David, can I call it the Kramer contrarian indicator?
Sure.
And for everyone in the audience, I had seen a posting that Jim Cramer, with all due respect, CNBC analyst and broadcaster, noted that every portfolio should have some percentage of crypto, which immediately made my heart sank, simply because every time he quotes that you should do something, that thing absolutely collapses into a fiery heap. David, am I overly worried for nothing?
Well, I think it did go down around 5% after he talked about it. So, I mean, look, I really like Kramer. Like, Kramer has really brought stock trading and buying and understanding to another level and made it engaging for a lot of people. So I do think his inverse portfolio is probably greater than his picks are. But that being said, I appreciate his enthusiasm and, his making it more reachable for a lot of people. But I still think Bitcoin's a buy for the longer term, if we're going to take some of his terminology.
I'm with you, my friend. Josh, you were saying something. Go ahead.
What do you think it means? Do you think at this point when he says it, it's just everyone's doing it just to prank him, or
no, it's
crazy that every time he's bullish on it, it is a or
David, do you want to tell her?
No, you can tell her, Ron. It's just
historically, and again, all due respect to Mr. Kramer, there are certain calls that have been just really wrong calls. And in
Yeah.
fairness, that happens for everybody. But we don't, some people don't have that quite big a platform as Mr. Kramer does. And it's basically a running meme joke. David,
I know, I do know that, but I'm just wondering, like, why is the meme true? Like, why is it continuing? Like, why, if it's like risen to the level of a meme, like, why don't people say like, okay.
Sometimes memes, like rumors on the street, Josh, are self-fulfilling. David, go ahead.
No, I was just going to say that, like, a lot of times he's probably directionally right in that he's picking something that has gone up. He's just late to the party.
Yep.
And now, people like view his as like a topping signal for whatever it is that he's recommending. So
there's nothing more terrifying than getting a Jim Cramer meme from David Brill. Just so nothing scares a grown man more. David, Josh, we're just about at time. Emma and everyone in the audience, thank you all so much for joining. Josh, when is the Gulfstream picking you up to fly you out?
Pretty much right after this.
She didn't deny the Gulfstream. I'm going to point out for everyone in the audience this go around. And David, I know you're at the beachfront compound. Is there a surfer version of a Patek Philippe watch that you wear when you hit the beach?
It's very funny. Actually, Ron, all joking aside, I'm not a big watch guy. It's just not been my thing. So I like my Apple Watch, and I'm happy with that. But I would say there are definitely some watches you can wear in the water that go like 100 feet deep or whatever, or deep enough for that. But
I don't know if I'd take a 5-digit watch into the surf, but that's
not my thing. But the water's really great this weekend, so I'm certainly going to enjoy that.
Yeah, it was 32 degrees. It was 32 degrees here in New Jersey. So today I'm going to continue digesting.
Is that snow you're showing us in the background?
No, water slides, indoor water slides.
Oh, wow.
My kids have been doing.
I am preparing for a couple of things. We've got some remaining working group meetings for the balance of the year, David. And also we have the WSBA annual holiday party coming up on December 11th for WSBA members. Looking forward to seeing so many of them. Hopefully a bit of a quiet weekend, David, as I continue to count down to 125. David, Josh, we're going to leave it there. For everyone in the audience, thank you so much for joining us. We're going to have a special guest next week as part of our broadcast. She may or may not know it yet, but we will get a note out to her. David, Josh, good to see you both.
She knows it.
You will be getting the invite and the email soon. We're really looking forward. David, Josh, let's leave it there. For everyone in the audience, have a great rest of the day. Have a great weekend, and we will be back next week. Bye-bye.
Sounds good.
Thanks, everyone.